Dear Chartered Accountants, working professionals and students in the domains of Indian auditing, accounting and the tax and regulatory space, welcome to podcast of FCA Deepak Rao, a practicing Chartered Accountant. Hot Topic Bulletin on Sebi's steps towards the agenda of ESG. Earlier, the Sebi allowed mutual funds to launch only one scheme with ESG investing under thematic category for equity schemes. Now, in view of the industry representations for allowing multiple schemes with different ESG strategies and considering the increased need for green financing, Sebi has decided to permit the launch of multiple ESG schemes with different strategies by mutual funds. Presently, the ESG schemes of mutual funds are mandated to invest only in such companies that have comprehensive BRSR reporting disclosures. Now, Sebi has decided that an ESG scheme shall invest at least 65% of its AUM in companies that are reporting under comprehensive BRSR and are also providing assurance on BRSR Core disclosures. This requirement shall be applicable with effect from October 1st, 2024. ESG schemes that are not in compliance with the aforesaid investment criteria as on October 1st, 2024 must ensure compliance with the requirement by September 30th, 2025. Further, during the set period of 1 year, ESG schemes must not undertake any fresh investments in companies without assurance on BRSR Core. Now, the AMCs must obtain independent reasonable assurance on an annual basis regarding their ESG schemes portfolio being in compliance with the strategy and objectives of the scheme. The Board of AMCs must ensure that the assurance provider for an ESG scheme has the necessary expertise for undertaking reasonable assurance. Further, the AMCs must also ensure that there is no conflict of interest with the assurance provider appointed for providing assurance on their ESG schemes. Such assurance shall be on a comply or explain basis for all ESG schemes for financial year 22-23 by December 31st, 2023. Thereafter, disclosure of assurance shall mandatorily be made in the scheme's annual report. The Board of Directors of AMCs, based on comprehensive internal ESG audit, must certify the compliance of ESG schemes with the regulatory requirements in the annual report of the scheme. The internal ESG audit must include verifying the scheme's information documents, stewardship reporting, and reasonable investment policy of the ESG funds and any other relevant document to ensure that the statements made in these documents are factual. This certification shall be applicable with an immediate effect. The Board of Directors of AMCs shall provide the certificate for financial year 2023 by December 31st, 2023. Thereafter, the certification shall be disclosed in the annual reports of the schemes. In conclusion, the Sebi has taken significant steps to promote sustainable and responsible investing through environmental, social, and governance funds. To ensure transparency and guard against mis-selling and greenwashing risks, Sebi has established an ESG advisory committee which has recommended enhanced disclosure norms for ESG funds. These measures are designed to foster green financing, promote sustainable investment practices, and protect investors from potential misrepresentation. By implementing these enhanced disclosure norms and oversight mechanisms, Sebi aims to foster responsible investing and contribute to a greener and more sustainable financial ecosystem in India. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.